What's going on, guys? Thought I'd give a quick update on the portfolio, talk about why I haven't really been making a lot of monthly dividends received videos, among many other things. So guys, I wanted to give an update on my portfolio. I am now almost at $200,000. I've reached the six-figure mark almost 2 times. So $200,000 at 27 years old. That's not too bad. I'm going to consider myself very fortunate, very blessed, but I know I could always do a little bit better. So I'll make a more official video once I cross that $200,000 mark, but it is crazy how fast time flies and how fast the portfolio grows if you just make smart decisions every single day over long periods of time. It really does add up. So you can see in the past year, it was only around $144,000, but every month, every single week, slowly just put in more and more money. And those shares, they just eventually appreciated because I was buying high quality companies, high quality ETFs. And over the long run, right, you'll notice that there's peaks and there's valleys, but over the long run, it kept reaching new all-time highs. I didn't panic sell, and great things happened in my portfolio. Now, you'll also see here my grand total of dividends or dividends has now passed $3,000 every single year. Now, you might be thinking, with almost a $200,000 portfolio, a $3,000 annual income is a super low yield. What is that? 1.5%? I already know I'm going to get a comment very similar to this. Like,
oh my gosh, if I had a $200,000 portfolio and I invested in a 90% paying ETF, I could retire early and travel the world and become the president of the United States. I could become an alpha male. I could become Elon Musk
with my 90% yielding ETF
that has a 2-month track record of paying high dividends.
Well, guys, I am an actual realistic person. I don't just go after high yields. I'm a relatively young investor. I try to buy more growth opportunities. But if you want to chase those high yields, not necessarily do more investing, but more risk taking and more gambling, go ahead and be my guest. So 1.5% yield. This is because a lot of companies that I own, they do pay dividends, but a lot of companies I own, they don't pay dividends at all. Or if they do pay dividends, it's usually a very low percentage, maybe that 1 to under 3% mark, which is actually my preferred dividend yield range for when I buy my companies. All right, guys, so why did I stop making my dividends received videos? For the past, 5 years, every single month I made how much I made in dividends video. Now, I'm somebody who likes to teach people about investing, but I think in the past I may have been putting too much emphasis on dividends, too much emphasis on the dividends. That's really a mistake that I think a lot of younger investors, especially myself, are making. Sure, getting a nice dividend yield every month or every quarter is great. But you know what else is amazing and so much more profitable is capital appreciation. And there's so many fantastic companies that are constantly growing, constantly evolving every single day. So that's kind of the first reason. The second is I don't ever really want to be in a position where I feel like I'm forced to make a video. It just stopped becoming fun to make certain videos, and I just feel like I have way too much to offer than just making the same repetitive videos. Also, at the end of the day, was I really teaching anything? Did seeing a portfolio with the dividends that I received every month, did that actually teach people anything? Or did people just blindly copy my positions? I guess we'll never know. I want people to critically think. That's one of the main reasons why I started this channel. I want people to think, because I'm not always going to be around, right? I'm not always going to be making these videos. In fact, it might be sooner than later that one day I retire, but that knowledge that I pass on to you, that will always last. Because sure, today Nvidia might be the hot stock. It might be the stock that everybody wants to do the fundamentals and research on. But 20 years from now, it's going to be a totally different company. Just like 20 years ago, it may have been Apple or it may have been Microsoft, right? Every decade, these companies that are hot are constantly changing. So you always need to have the knowledge, be asking the right questions, and think critically about businesses, about where we'll be in the future. Just like it was different when Peter Lynch and Warren Buffett were investing, it's going to be different in the future. But that mindset that all of us have, that's not going to change in the long run, guys. And the last one here, guys, I'm not trying to be, too conceited here. I understand this might be a little bit of a humble brag, but I have done very well in the stock market in the last couple years, and I feel I have too much valuable content that I'm giving to my Patreons that I can't just be giving away for free anymore. So that's a large reason why I don't want to do these portfolio reveals, because I'm giving away way too much valuable info. All right, guys, so this is my stock market performance. This is an actual screenshot in Fidelity showing my performance on my taxable account. That's the portfolio that I have the vast majority of my wealth in, and you can see I've done quite well. It's actually super rare to beat the market, and it's especially even rarer to beat the market over a 3-year span. Less than 20% of people, even the best hedge funds, the best sophisticating trading softwares, algorithms, AI, they cannot beat the market over that long of a time span. Now, I was very fortunate that I successfully predicted how fantastic of a company Nvidia would be and how much success it would have all the way back in 2019. And if you don't believe me, if you think I'm just making things up, I actually still have all those videos out. If you go and check my playlist from 2019, 2020, you can see the videos that I put out talking about Nvidia. Now, a lot of YouTubers, they won't actually share their personal results. It's because the vast majority of them aren't beating the market, but that's totally fine, guys. You don't need to be beating the market to be spreading knowledge. It's super hard to beat the market in any given year. To get over a 7 to 10% return, that's historically what the stock market returns every year. So anybody who's beating that is already doing well. So guys, in the past month, I am returning almost 8%. S&P 500 is at 5%. Over a 3-year span, that's again 8%. S&P 500 is at 4%. Now for the year, the stock market has done very well at 11.3%. But I've done even better, returning 19% year to date so far. This is as of the end of May, and Nvidia has done even better since their massive stock split. So my returns are even juicier. Now in the past 1 year, this goes further back than just 2024, I am up a mind-boggling 36%, while the S&P 500 is up 28%. Again, guys, this is not to brag about anything. If you have just invested in the S&P 500, getting a 28% return is incredible. It is absolutely insane returns. You can make so much money in the stock market. And honestly, guys, if you are somebody who's struggling to keep on pace with the S&P 500, you really have to consider if maybe having a more hands-off passive approach to investing, that might actually be the more profitable option for you, right? Warren Buffett himself recommends that people just buy the S&P 500 because, like I said, over long periods of time, the average person cannot beat the market, right? We have Wall Street professionals who do this for a living. They cannot do this. So again, I know I got very fortunate that I was able to successfully predict Nvidia's success, but I've also had many other successful picks, right? So I've had Nvidia, I've had Applied Materials, which has been on an absolute tear recently. I was able to predict how important semiconductors would be in our future, and there's other companies that I got right, like Apple, Microsoft, and of course I also had many losers. The good news is, though, I had more winning picks than I did losing picks, and that's why I've been able to be so successful. But how many other YouTubers, again, are sharing their actual returns and they charge so much more? Now, of course, there's always going to be free content on this channel, so don't think you have to be a Patreon to learn from this channel. All right, guys, I promised you guys some dividends, some passive income progress. So let's kind of see how I've done. So I believe my last portfolio update was actually done in February when I made $152. But in the 3 months since then, I made over $412 in the month of March. That's my big money making tranche month. Then I made $149.19 in April. And you might notice this is actually less than I made in 2023. Now, does this prove that dividend investing is a scam and will never work and you won't be able to retire early and you won't be able to become a high yield dividend warrior? Well, not necessarily. You see, every now and then I do rebalance my portfolio. I do sell out of some positions. So I sold out of Medtronic. Talk about a stock that's in complete hell. That stock goes absolutely nowhere. I've owned it for so many years. I was like, all right, I'm done with this. Get out of my portfolio if you're just going to be paying a 2% dividend yield and be mediocre. All right, and then I lost my entire Vici position due to a covered call being executed. Still made off with money, still made off with a lot of quarterly dividends, but I'm working on slowly getting back into Vici. And then, of course, the REIT, Medical Properties Trust, they also cut their dividend. Yeah, so for anyone who says that dividends are guaranteed, we'll show you some sort of projected dividend cash flow chart on a brokerage, very similar to what I did earlier in this video. It's not guaranteed, right? Just because I said I'm going to be making $3,000 now in the future, that doesn't necessarily mean that's true. That's just a projection. It could come true. It could not come true. It could be higher. It could be lower. It's just kind of a guide on how much I can expect. So $149, again, because I rebalanced some positions, that's why it's lower. But don't worry, I'm going to keep accumulating shares of high quality companies, and that number will continue to go up. So in the month of May, I made $165.72, which again is an increase of $132 that I made the year prior. So guys, I've been investing now. This is my 7th year of investing. I've invested for 6 full years, and you can just see the progress, right? My rookie year, my freshman year, I made $85. I now make way more than that, almost 5 times that every single big money-making tranche month. That's just absolutely incredible. I even make more now in some months than I did my entire sophomore year of investing. And who knows, maybe one day I'll get to as much as $860 in passive income. But more importantly, guys, every single year, the amount of dividends just keeps going up. This is passive income that I did not need to work for. Now, dividends are great, but they're not the only way to get rich with the stock market. Dividends are just the cherry on top. They are not the reason I invest in the stock market. But guys, remember, pick high quality stocks, pick high quality ETFs. Let them do all the work for you. Now, the keyword there is high quality. There are no shortcuts to getting rich. If there was a shortcut, everybody would be doing it. And make sure you've joined the Dividend Discord. That's another great way to learn so much valuable info for free. My videos are always found in podcast form under the Collect Cash podcast name. Hopefully this is some sort of inspiration for you guys as you're on your journey, but let me know in the comments if you want to see more videos like this, if it was in fact helping you, teaching you something. That's what I really want to know, and that will help me gauge what videos to make in the future.